Oh crap, sorry, mute button. Hello, this is Dan Max at eXp Realty, aka the Trading Agent. Apologize about that. Mute button was hit. Yeah, can I get a mic check real quick? Man, sorry about that. Sorry. Sometimes you just make a mistake. Just roll with the punches. A lot to talk about in this video. I hope people are prepared. Get notes if you have not. If you have not watched the options expiration videos, well, guess what? You're about to get a crash course on all of it really quickly. So give it another minute. Let people jump in. I appreciate everybody. Love support. Hopefully you're doing well. Markets move quickly. As we talk about, velocity begets velocity. Hope that makes sense. So if you have any questions, thoughts, concerns, drop them in the chat real quick. Maybe I'll start there, but trying to eat a late, quick breakfast, lunch. Trying to get a million things done today. Watching the market at the same time. So, all right. Looks like we got enough people in here. Let's just do this. All right. What have we talked about? Blow-offs, extremes, market does what it's going to do. Typically tops during options expiration or first and last 3 business days of the month. We've noticed what's going on with the market, right? Straight line moves, capitulation, AI this. Every company says, the worst is behind us. Great. We'll see about that. The indicators, literally, economic indicators are right on the, again, most of them are literally, they're showing that we're going to have a recession. Just a matter of when. People are like, oh, it's soft recession. Oh, it's behind us. The Fed's this. I pound the table, I pound the table. When have the Feds ever navigated a soft landing? They can't. And especially the way they're raising rates this quickly. Like the next rate hike coming up here in July, next week. Do you not believe that just as they lowered rates too low, spurned a bubble, they're going to raise rates too high to do what? Crash the bubble. Now, I'm in real estate. I'm trying to warn you guys. I am seeing this. I'm seeing price cuts for months, and it's getting worse and getting worse. And people say, well, did you see the new home sales? Well, everyone wants to buy a new home if they can. Banks are certain builders are actually doing their own financing. Keep that in mind, right? They're doing sub-market rates. They can do 3-4% if they have to. They can do all sorts of incentives. Now, again, new builds, whatever, doing what seems like okay. But you're seeing existing home sales fall off a cliff. Seeing it here. Which is crazy because Denver's, one of the most popular places to move in the country. Now, it is a little more expensive, but still, in general, this is one of the, what I would call, markets that you need to pay attention to. Just like here in Florida slowing down. Florida's slowing down. Denver's slowing down. Let's not talk about California because that's already slowed. Right? You're seeing it everywhere. And so, credit crunch. And we've talked about this for months. And people still troll. I don't really care. I've talked about it. The credit crunch issue starts, then it does what? It just proceeds. Because once lending becomes more difficult, higher rates, people are more of a credit risk, the banks have less money to loan because of stricter requirements, what happens? That faucet of liquidity just starts, and it just slows and it slows and it slows. And what have we said for months? The Feds at some point are going to want people to buy the dollar and buy bonds because they want to stay the reserve currency of the world. Well, how do you think they're going to do that? By all that money flowing into tech? Now, again, is today the ultimate top? We'll look into that. If you have any questions before I get going, jump in. Like I said, I'm going to do a lot of talking about options expiration. Just from the simplicity. People talking about, oh, did you look at the put call ratios? You look at all. I'm telling you, it can be that complicated, but also cannot. It doesn't have to be. It does not have to be. All right. Let's jump into it. So the dollar, right? Just talked about it. Holding lows. Something's going on overseas. People want dollars, whatever. People are going to get scared. We've talked about chopness. Said this action was a little scary to me, light volume. But again, the velocity begets velocity. Was this a trap? Bonds, right? Same kind of thing. Said, watch the low end of range. Held. If you bought down here, high five. Can you be buying on dips? I think so. I mean, I'd love to see it break just a little bit below, maybe. I mean, could you get down to 94, 95, fill the gap? Maybe. Buyer all day. Tight stops. Love it. Again, velocity begets velocity. You start chopping. Once we break out of this range, it's going to be huge. Right? Got it? Netflix. Now, again, whether you want to read the earnings or not, whether you want to take it as positive or negative, didn't I say watch out for the left-right combo? Well, Jesus. Said big green, doji. Well, here's the earnings. Ugh. That's a professional gap, y'all. That is a start of a down move. I don't give a crap what happens the next few hours, the next few days. That is the start. Down move. Sorry. That simple, right? Tesla. You were saying, oh, it's got to get to 300. No, not necessarily. Close enough for government work. We talked about watch what happens when it's up here. Now, same thing. Professional gap. Once it got below the 8-day, you could have started taking shorts. Now, if it gets below the 20-day, same thing. Now, again, do you want to chase it today with the options? Probably not. They're going to be expensive, and they're going to do what? IV is going to come down, and so, but hey, if you shorted stock, bought the TSLQ or whatever, looking good. We talked about this stuff. I mean, this is what's so hard. Down here, in the midst of this crap, remember when I said, oh, you could probably buy Tesla at 100 and watch it and make 40, 50%? Well, you could have done more than that. Sorry, my estimates were slightly off. But extremes, people don't understand the psychology of it. It's like, oh, I got to hold and get every fucking penny. This is the dangerous part, is you don't know earnings and the reactions. Because now people are sitting here probably holding, maybe say, for example, NVIDIA. And they're going, it's just Netflix. It's just Netflix. Okay. We said channel high, watch it, could retest. Right? Okay. This is what happens, the psychology of this crap, is that once people start seeing, oh crap, 10, 15% down moves, because things are so stretched up, do you really want to hold this? So, for example, like it goes from 108 to 480, trading at 30 times whatever, future sales or something crazy. And remember, we talked about distribution. People were distributing up here. We talked about it, how insiders were selling. We talked about big institutions unloading as much NVIDIA as possible. But what did you get? 17,000 upgrades at the highs, right? Same brokerages who were telling you downgrade, downgrade, downgrade are now doing what? Hey guys, upgrade. Let's upgrade it at the highs. How awesome is NVIDIA? It's a great buy here. Are you crazy? How can you not buy it? It's on a rocket to 1,000. And I think Sabalena, if you're listening, do you not remember we talked about there's always one stock that leads? What happened in 2021? Which one was it? Good old Tesla. Whee! Right? Now, do we know for sure if it'll play this game and get wide and loose? I don't know. I'd argue NVIDIA's shit out of luck. Because competition is coming. Competition for chips, always on the horizon. Electric cars, I mean, Tesla kind of had the nut flush for a while. I don't trust this at all. And if you remember the past, and you saw the old names from the dot-com bubble, this is what they did. They went up to prices that made no sense, which, again, I'm impressed that we even had this kind of action. Now, again, I could be wrong, and they flood more liquidity and come in. Let me put that as a preface. Like, that is the only thing. Like, if they're still continuing to raise rates and pull money out of the market, then yes, the market should do what I think it's going to do. But if all of a sudden they go QE infinity next week, all bets are off. Keep that in mind. But look at this crap. Rubber band man's getting tired. Now you just stretch it out, stretch, and velocity begets velocity. I'm just telling you that. That's why it's like people are like, oh, I'm scared to short. Even the bears are scared to short at the highs, which tells you a lot. There's no one left to cover. There's no one left in. Remember that big S&P futures short? That was a hedge? Well, that's unwind. Now everybody's naked again at the pool. Apple. Trying to hold the market up, right? 1.382. Is this a trap up here? A little bull trap? Talked about that long wick. Sorry, I didn't do a recap yesterday, but I thought I did. It seems like every day I just took a day off. Look at this. Keep an eye. Trap. So let's talk about options expiration then. Why is options expiration so important? Well, keep in mind, a lot of bets are put out way ahead of time about the action in the market, right? Big monthly expirations, right? July during earnings. This one, for example. Well, what is typically the play out in the market for OPEX? It's choppy. Usually go one direction one part of the week, another direction the next part of the week. Well, guess what? The direction of perpetuity, in my opinion, is the one that's the end of the week, obviously, right? Because the first one's a trap. Second one is the close of the trap. And so if you're thinking about it from that perspective, it is earnings. You might have some pop and chop here for the next 2 weeks as we have different earnings. And, of course, cheerleading companies cheerlead all day. They're not going to say, I'm like, hey, the world's going to end. I'm the worst CEO ever, and this company sucks ass. No. Mm-mm. So maybe Apple's the one who saved it. Maybe it's Amazon. Who knows? But if you shorted, man, we talked about some of these levels in shorting. People just couldn't wrap their head around, like, holy shit, you're at some levels that are just, if you can be patient, and if you get stopped out, fine. If you lose a few points, who cares? Who cares? But when you nail the trade, it's not going to be for a few points. So I'm trying to warn people. I'm just like, I can't understand it. I'm just going to wait. Well, this is the problem with waiting. You don't know for sure. Now you can get in here. I mean, Tesla's still making low of the days as we speak. But if you shorted up here, small, you started your entries, maybe even hedged through earnings, you're good. You're good. Right? I mean, you started shorting Amazon. I know some people followed that trade, said, look at that sucker. Watch what happens up here. Poof. Looks good, right? We've talked about semis. I mean, do you really think on the monthly they really deserve to break out? Like, check this out. Really? Huh. Okay. You really think it was going to break out in this economic environment? Get the out of here. Come on, man. Probably not. Now what? Professional gap, watch the 20-day. Keep it simple, stupid. Qs, right? We talked about Qs leading up, right? Joe, I hope you got that Amazon. I love it. Okay, hits up. I mean, this is what's so hard. I don't know the levels. If someone's out there telling you for sure they know what the level is of when something's going to top, how do you know what positioning has to unwind to knock that? I mean, do you guys get like this thought of like, oh, I need to search all this stuff and spend all this time? Like, you don't know the players in the game. I'm sorry, you don't. I don't either. We don't know who needs to cover, who needs to get squeezed, who needs to get pushed out, what options hedging strategies are just all over the place. Now you can try to figure it out. Again, I just have tried to do that before, and I'm just like, you know what? I like simplicity. Define my risk. If I'm gone, I'm gone. If I need to get back later, whatever. If I'm wrong at time. And this is what's so hard about the markets, right? You're going to be right a lot of the time. You know, very easy in the bear market. Boop, 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 boop. Talked about this short. Talked about buying down here. Talked about this short. Great year. Great year, 2021, 22, for the most part. Yeah, 2023, a little rougher. Naturally happens. You're going to go through phases, right? Does this make any sense? That the Qs would literally go from 258 up to almost 387 in this economic environment. Nope. Okay. I mean, sorry. I mean, you can create the narratives. AI. I mean, and again, we've talked about this. AI has been around. All it's going to do is increase unemployment. Eventually, it's like every other technology, because this is what technology is. The pricing and the margins go down, because, again, everyone's going to try to offer it. So, again, it's like chips. It becomes a commodity. It's pricing in the best case scenario. Did I expect AI to price in that kind of? No. Because, again, I don't think it's going to add that much to the economy beyond, the incremental amounts that it's going to be added, right? Like, it's not going to be like all of a sudden the economy is 2 times more efficient because of AI. No. If it is, then, man, we'd have like mass layoffs tomorrow. Well, that couldn't be good for income and holding up. Yeah, everyone's, again, it's like, did anyone look at if you saw the Google searches for AI? Like, again, you can see when retail money is Google searching, like, how to invest in AI. Okay. Just is what it is, y'all. I mean, how many... Man, Tesla still just bleeding. AMD, watch the 50-day. The Airport Food Services is advertising AI. LL. Yeah, exactly. Taiwan Semi says, uh-oh. If you listen to their earnings, you listen to the report, they're anticipating slower growth. But what AI, Dan? But AI. Okay, well, watch this zone here. I mean, let me just drag this donkey over. You're there. 50-day break-in. Uh-oh. Is that a head and shoulders? Galaga top. Pew, 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 pew. Leader's not leading anymore. Something's not right. Does this make sense? Just watch Apple. Apple's the only one that's holding up, in my opinion. Keep an eye on it. All right, so some people are saying, well, are we rotating money into financials? With the way interest rates are acting, again, not surprised. You had Morgan Stanley, Goldman, a lot of these names popped. Not surprised. XLF 35 plus, give credit current. I didn't see that coming, but you know what? Shit happens. Here we are. Said watch the low 30s once you get there. Are we going to really rally more? Keep in mind, liquidity, market makers absorb, market up. Are we getting liquidity yet? Maybe it's coming. KRE. Talked about it. Liquidity, rallied up. Now we're back at prices where there is a ton of people stuck. Are we really going to rally more? Good luck. Good effing luck. Grains rallied on some stuff going on with Russia. We talked about this all potentially possible. Love these names long term. We talk about because you're going to have to eat no matter what the hell happens. You can't AI your food. I don't think so. All right, cool. We talked about bottoming, capitulations. You want to trade them? Great. Now people are like, oh, you said take profits on them. Well, again, it's one of those things where you're sitting here with a grenade that could blow up. If the market pulls back, these things are toast. Love them, though. Love them long term. Again, we love materials. XBI, what do we say? Watch the levels, right? We said broke the channel, would hold support here, rallying up. Look at these wicks. Uh-oh. Turn around. Options expiration. Again, so many bets get placed going into these times that, again, you're going to have up part of the week, down part of the week, chop, a lot of action, destruction of the VIX. I mean, look at the VIX today. It's barely up 1 penny. But the market feels like it's about to jump off a cliff, right? That's the nature of it. HYG. Everything's great, right? Talked about watching these levels. Corporate debt. Gap down. Uh-oh, Spaghetti-O. Watch the 75 area. Holding. Better hold. TAN, we talked about solar rallying. Gift from the gods to short that shit. Boom. Right? You took Sedge. Now, again, keep in mind some of these names have earnings coming up. Nice trades. First solar. Now, this thing we talked about, 200 level would be a gift. But if you were patient, you said, oh, well, hold on, look at that. Boom, right to the backside of a trend line. Doink. That's why, again, remember, we talked about this with First Solar a million times. Like, it's pretty volatile. It's pretty volatile. Keep that in mind. What now? Gold, again, dead cat bounce. What levels? I mean, this is the thing. Watch these areas. I thought maybe the 50, 100 day, then we gapped up. I was like, well, good luck. I'd be very impressed if we can get through this level here. I would be very impressed. Like, this is massive, massively resistant. And again, if the dollar's going higher, they are going to throw the baby out with the bathwater. Silver, nice little squeeze. Squeeze. Fills the, I guess technically touches the gap. Doesn't really fill it. All right, keep an eye on this. Because all this stuff, squeeze. We talked about the miners, like really trying to lead. Gold and silver up. Miners not as much. Remember, gold, silver up probably into these ranges. Miners not so much. Said filled the gap, broke over resistance. This is what's so hard about trading sometimes. Oh, it broke over resistance. It has to go higher. Trap. Turns right around and gaps down on you. That's why miners are very difficult to trade. Hell, that's why I tell most people, if you can't trade the market well, don't trade miners. That's for damn sure. GDXJ, same kind of thing. Uh-oh. Microsoft pops on their new subscription-based model. Buy the rumor, sell the news. There's your high volume liquidity at the highs. Making new 52-week highs. Breaking back below them. Is this a bull trap with huge volume? Put that in your pipe and watch it. I would say smoke it, but I don't know. Do you need to smoke it? No. All right. Any other thoughts, questions, concerns? I mean, look at this stuff. I mean, this all looks like crap. Meta was like, just, this company's a joke. Absolute joke. They made their Twitter competitor, and all of a sudden, like, nobody's using it. What about the inverse ETF FNGD? What is that? Like the... I've heard of it. GD. I mean, again, I'm not really charting it. What's the name of it? It's the FANG. Yeah. I mean, yeah. Huh. I mean, if you bought this at $8 and you put a stop at $7.50, I think it makes sense. I just don't know how well it really rises. I guess that's solid. 37. I mean, it's probably due for a reverse split, but yeah, I mean, somebody's taking out protection down here. Again, I don't really like to look at the volumes because, again, the share count continues to increase, right? Because these things decay, but, I mean, again, it's like UNG. If you think natural gas has really bottomed and you really wanted to buy it at $6, $7, wherever it was at, 5, 6, it goes up to 7, 8, all right, cool. Now, could tech crash? That's, to me, more likely than natural gas taking off. But, again, natural gas would be predicated on what? Probably global instability, right? Because, again, materials in general will take a hit when the global growth names, global growth in general slows down. It is. Global recession. Global recession. Airbnb, love this name up here. Now, again, tight stops. Short interest, getting squeezed. CEOs, management, everybody and their mom dumping every share possible. Keep an eye on that. These levels. Again, please don't bring a ruler to trading. I swear to God, I have to put people in timeout and talk to people. I'm like, listen, hey, bud, leave it alone. Have we covered NVIDIA in the live chat? Yes, but I'll go over it. I mean, it's real simple. It's real simple. You blow out. You're blowing out. Channel high. Again, his name is dangerous. Now, you get 3 more upgrades today or 2 more, whatever. The same companies that were downgrading at the lows are now upgrading at the highs. Extremely dangerous. Extremely dangerous. How high is it going to go? I mean, that's the problem here. I don't know. But at some point, it's coming back down to earth. They always do, y'all. They always do. Any take on Etsy? Brazil seem likely they might cut rates soon. I've heard how often cutting. Yeah, cutting rates is not bullish. Cutting rates is not bullish. The reason why countries are cutting rates is because what? The economy's slowing. Think about it. Study the past. Some of the biggest crashes start when the Feds start cutting because the Feds are now admitting, wow, the shit is about to hit the fan. Things are bad. Here's the problem, though, is the Feds have raised rate at a rate not seen ever. People don't realize that. The acceleration of interest rates from where they were, percentage-wise, nothing in comparison. Ever. Oh, who knows how that'll work out? Soft landing, right? Soft like banana landing? Right. Okay, we'll see. I mean, again, it's all the same thing. XHB housing stocks. Look at this. 5 days of uh-oh. Engulfing bar. Not bullish. After a monster run. Monster run. Is housing really that much better? No. But guess what? People remember The Big Short. How Michael Burry was just going, what the fuck is going on? And they kept pumping this stuff. I mean, that's what I'm trying to explain to people. Like the market makers, how the insiders work, how this works. Again, at the highs, they are going to upgrade. And they're going to yell, everything is a screaming buy. And if you've ever traded long enough, you've been around in the bear market, you've been following the channel, you remember, at the lows, the world's gonna end, Dan. I'm like, it's time to buy. The world's gonna end, Dan. All right, well, I'm buying. Talk to me in a couple weeks. That's how it always plays out, y'all. IWM, again, watching this range up here. Little double topper. Maybe a left-right combo. Watch what happens to IWM. Again, Q's not looking so strong, boss. Professional gap. Maybe it's just a couple days down to the 20-day. I don't know. Maybe next week Apple saves earnings for a day or two. I don't know. But your risk reward now, shorting up here, is exponentially in your favor. Just don't assume you can't be wrong. That's all I just warn people. Look at ARK. Look at that. That's what I was trying to explain. Like, this is not what you want to see. Like the IWM, if it, dojis, gap down, engulfs multiple days. Typically have lower lows to come. That's just how that boat floats. MP, I remember this name. I'm just kind of floating around. People were like, oh, what do you think I should do? And it's like, I mean, I love commodities long term, but we talked about selling it up here, take profits. CCJ trying to, speaking of ARK, Kathy Wood's buying it, uranium. Is this a breakout? I mean, I wouldn't trust it. I would not trust it. Intel, good old Intel, junk. Little gap down, watch the 20-day. All right. Any other thoughts, questions, concerns? Again, you can run through this and just know, like, top X, first and last 3 business days of the month. Typically, chop X, sorry. When you see bottoms, highs, whatever you want to call it. Just please, for the love of God, manage your risk. Manage your risk. And keep in mind, velocity begets velocity. You might see days where all of a sudden the market's down, big, rallies back, and then it fails later. XOP, interesting up here in this area. Is it really going to break out again? I'm seeing some of the oil stuff rally because of global growth. Or sorry, not global, but rumors of Ukraine attacking Russia. Again, like, this war is, man, I don't want to get political, but if you're really all about this war, you're an idiot. Russia's not planning on doing anything. We got so weak once we lost Trump. I'm sorry. It's just the reality of it. And now they're just using government spending to facilitate, which it feels like money laundering, to just pump it into Ukraine, to a war that has no resolution. Do you think Russia's going to back down? No, it's all predicated on what? Other countries putting money into Ukraine to go to war against Russia. What a joke. I'm telling you, a proxy war. It's such crap. Sorry, that topic really bothers me because, again, everyone wants to see Ukraine survive, but SPR dangerously low levels. Yeah, it's been like that for a while, but global growth. Do you guys remember when global growth engulfed oil and it went to negative futures prices? Again, I think OPEC will continue cutting. I think at some point oil will be a buy, but I wouldn't buy it yet. I just joined. You may have already covered. Do you think UVX buy? Again, no, I don't really like UVXY. I just don't. You can trade it. The VIX is at levels. Sorry, the VIX is at levels. Let me pull that up. It makes sense. I love shorting the UVXY. Yeah, they could take a decade to refill the SPR. Yeah, because isn't the SPR like, what, 55, 60% full? That's still a lot of oil. The VIX, UVXY, I'm not a fan of the UVXY. Just not. But if that floats your boat, you go right ahead. You can't chart the UVXY. It's a completely decaying piece of shit product. You got to use the VIX. And then know it decays. Why play the VIX? If you think if the VIX is this low and the market's going up or down and the VIX is going to go higher, why wouldn't you just short stocks, buy short ETFs, buy things that aren't going to decay? The market can drop and the VIX can still be down. And sometimes I'm just, people are just so fascinated with UVXY. If they studied the product structure, they'd be like, oh, it's a retail tool to fleece them. Now, every once in a while it works. I'm telling you, the best trade on UVXY is always to short it. Always. That's what pros do. Every time. Short the pops. Oh, but it's about to rally. Okay, cool. Maybe it is. Well, then define your risk and good luck. Keep it simple. Just keep it real simple. You want to buy it at 17, put a stop at 16, I guess. Just keep in mind, though, that's what's going to be the problem is there's going to be days where the market in a trend, not necessarily VIX big moves. And then every time, this is the thing, if the market pauses, the VIX gets slammed, but the market might just barely move. Remember, it's all about volatility. It's not about the market itself. It's about volatility. If the market's screaming lower and then pauses, what happens to the VIX? Compressed. So why would you want to own it? You're going to get owned. Yeah, expect. Yeah, here's another one, Newmont. Uh-oh. Look out below. Any other thoughts, questions, concerns? Always here for you guys. Try to answer some of these questions. I know people are like, tell me for sure what's going to happen. You're going to die. You're going to have to pay tax. Well, I guess you don't technically. You're going to need to breathe. It's all probabilities. It's always been always probabilities. how you want to determine them, if you want to use your Bollinger Bands and your MACD and all this other stuff. Yeah. What are the lottery numbers? Yeah, that's a good question. That'd be a nice one. That'd be a nice payday. Dan disappears from the trading agent channel. Wins the lottery. No, if you win the lottery, you get an attorney, you go silent. You don't tell anybody. You tell nobody. That'd be my advice. That would be my advice. Look at the Vivix just chopping. No, unless you want everybody to attempt to rob you, use you, take advantage of you, and be fake friends because they know you have hundreds of millions of dollars. And guess what? You're probably not surrounded yourself with rich people who wouldn't care. No, you're surrounded by people who would what? Cream their pants to be your friend and kiss your ass. They're not real friends. They just know you have a lot of money now. I mean, if you want to pay for service, you can pay for servants. You don't need to chunk off money to your friends. They might not even be good at the job. Why don't you be my driver? No, you're not a good driver. Yeah. MicroStrategy is interesting up here. Nice run up. Talked about that one running with the Bitcoin. Man, not the only thing that's holding this market up is people saying rotation. I get it. Some of the Dow's up. Who had earnings? Is it IBM is up? Let's pull it up. Who's pulling up the Dow today? Okay, that's what I thought. It's IBM. That's what I thought. Interesting little... I mean, damn, this thing goes all the way back. I mean, let's just start it here. I don't know how you want to draw it, but it looks like a resistance zone. And this is, like I said, this is what's going to be hard with the market during earnings. There might be individual names that have their individual own stories that might do better based on last quarter, but who gives a shit? Maybe expectations were literally for them to lose money. And, oh, hey, they scratched out a win with non-GAAP earnings. Cool. Good. Accounting wizardry. Awesome. Yeah, I mean, I've seen this stuff a million times. I mean, it's just hard to know what the right answer is all the time. And again, if you're looking through the market through this lens of like, I am going to be smarter than the market. I need to invest in 1,000 tools to figure out how to be smarter than the market. Or keep it simple. Define your risk. Have stops. And just know you can be wrong. The winner of the game is the guy with the smallest losses. Do you guys not realize that? I try to explain that to people. No. You got to win a lot. No, think about law of large numbers. Think about these big institutions, these big money managers. Buffett just doesn't, dude. He is so risk averse and doesn't want to lose. That guy sells covered calls like he calls his mom. Probably his mom's like dead, but calls his grandkids. For what seems like forever. He's now, I think he owns what, 27% of the company. Occidental started buying it last year. It's gone nowhere. What do you think he's doing? Covered call selling. End of the day. All day. Every day. Scott, Dan the man. I wouldn't say Dan the man. It's more like Dan the man with the plan. Trying to. It's hard. It's hard. Again, when the market's irrational, it can be more irrational than you can say solvent. That's one of Livermore's favorite quotes. So just be careful. I mean, is this sustainable? That's why I talk about velocity begets velocity. The further they stretch this market, the more nervous you have to be as a bull. You have to be incredibly nervous. You have to be incredibly nervous. All-time highs coming soon. Again, I guess you don't follow the daily recaps. Talked about the 1970s. What year was it? 73 or 74, where you had a monster rally. Tried to get up to all-time highs and failed. But what is this all inspired by? One sector. Literally one sector. Look at all the lagging other sectors. Come on. Just be careful. No, and that's the thing. The bears are scared to short the fucking market. How obvious are we close to the bottom? At the bottom, bears are uber bullish. Or sorry, at the bottom, bears think they can't lose. And at the bottom, bulls can't fucking buy. They can't. Where are we at in this market? Bulls think they can't lose. Upgrade galore. Every brokerage that's late to the game, upgrading at the highs and grading NVIDIA. And now bears are scared shitless to short. You can't have a better recipe. with defining your risk. Holy shit. I don't know how much louder I have to get. Let me turn up the volume. Ah! If you're not shorting up here, you're a fucking idiot. Excuse my language. Again, tight stops. Define your risk. Be careful. You have certain companies with earnings, but holy shit, if you're not willing to short the market up here, then you're probably not the same. You're the same person who's not buying the dip when shit looks like the world's going to end and then it rallies. It's the same people. It's so emotional. CNBC is super bullish. No shit. Everybody's bullish. I'm seeing people who I follow that are just retail people like, oh, I feel so much better about my life now because the market's come back. I feel better about my stocks. The same people you couldn't convince to buy in October will not, or the same people that you can't convince to sell now, and they won't. They won't. Credit, I'm telling you, credit crunch takes a while to play out. Same shit happened in 2007 and started to 2008. Think about when the first banks failed in 2007. Nope, people just don't know their history. Again, once stuff starts tightening, the tightening of the noose, exactly, the noose starts tightening around the credit markets. Again, the Feds are in an unprecedented rate hike cycle. Never this much, this fast, this far. Remember, interest rate policy has a lagging effect, 3 to 6 months. You think the market at some point is going to go, man, these guys overshot by a mile. Oops. They're going to be cutting by the end of the year. I mean, what's the Fed fund future? I'm just curious to see if they're anticipating them cutting. All right, so let's just go. So we're at 5.5. Let's see December's. Right. So by December, they're expecting pauses. January. More leaning towards cutting. March. Definitely leaning towards cutting. May of next year. Holy shit, they expect us to already be down 50 basis points from here. No, the market's not going to collapse if it hits 6%. No, I don't think that at all. Again, the market's already slowing. The economy's already slowing. The market's going to collapse when they realize the Fed's fucked up. And again, it's not their job to advertise that. I try and explain this to people a million times. At the bottoms, they don't advertise it's time to buy. And at the highs, they don't tell you it's advertised time to sell. They're just not going to do that. What the interest rate is, I mean, again, it doesn't matter. They've gone too far, too fast. I'm refinancing some properties right now. I mean, where they were at last year versus now, mortgage payment, again, you're stuck. It's double. It's essentially double. It's essentially double. Bullshit. Not bullshit. It's hard. It's hard. Think about commercial real estate falling off a cliff. That is never coming back. Never. Never. Never, ever, ever. In our wildest dreams will people be moving back into offices. Why in the hell would you do that? When you can pay people to work remotely and you have internet anywhere. People can't leave where they're at. Say they lose their jobs and have to move. Uh-oh. That's why you're seeing Denver actually slow down, because the cost of living is higher here. House prices are expensive. Seeing this in a lot of high-end places too. What do people do? They're leaving. They're absolutely leaving. I can't live here. Oh, I lost my job. I can't afford this house. I got to get out while I can and pull all that equity. And I'm moving to Nashville or Texas or moving to somewhere. Florida's not cheap anymore. Okay. I'm just trying to explain this to people. And then it's like, well, what if AI starts taking jobs everywhere? Uh-oh. I mean, isn't that the whole purpose of adding AI? I mean, one day you're going to roll up into McDonald's and there's not going to be a single person in there. And if they are, they're getting paid nothing, and they're going to be wearing a headphone attached to some, like, iPad. And, excuse me, sir, what'd you say? Hello, this is Johnny 5. Welcome to McDonald's. May I take your order, please? Yes, that will be $70,000 with inflation for a hamburger. Hope people got their gold and silver, though. Hope people got their... I mean, again, I hate recommending any crypto, but some of them are going to win. Yeah, it's all kiosk and robotics. All going to be like that. It's all going to be like that. But keep in mind, like, you have to, it's cost money to invest in it. And if the economy's slowing, how fast and how rapidly can a business just turn everything over and fire people? Some companies like McDonald's, they can do it quickly. Everyone else, not so much. Remember, they usually have loyalty to their employees, and they try to keep them hanging around and keep them hired, and then eventually the business goes belly up. I mean, we saw this a million times. I mean, sorry, not a million times. I've seen this in multiple cycles. That's just the reality of it, love. That's just the reality of it. Any other questions, thoughts, concerns? This is why this is so hard, though, because if, again, like in the 70s, you saw this cycle where you got that mega rally that just ended up being a huge, choppy 10-year cycle. Well, I mean, it makes sense. Like, let the feds raise rates as fast as they can. Then they're going to have to kill inflation. Maybe the cycle accelerates because of what? Because they'll kill. I mean, they will kill inflation. But the problem is higher interest rates do what to the federal deficit? I think our interest payments alone now are more than our military budget. So what's next? Why do you think I like solar shorts? Government spending cuts. Love it. Who's going to be affected by it? Keep in mind. Keep those names. Think about it. Technology companies, tech. Green. Why do you think it's like oil and gas makes sense? But their prices will have to come down, right? They'll come down because they throw everything out. Any other thoughts, questions? Again, this is what's so hard about this. I wish I could tell you it started last week or last month or in March. You don't know. People say, well, when the feds cut, that's when it's going to do it. Okay. Is it? I don't know. I mean, Europe's in shambles. China's cutting because they're in shambles. I mean, their unemployment rate for the youth is 21.3%. Yeah, this administration spends like there's no tomorrow. I mean, do you not think the next, and this is where this cycle of how long this might take to get out of is, whoever's running for president, running for Congress, like, what do you think they're going to run on? Spending cuts, getting the budget under control. Spending cuts, getting the fiscal deficit. Doesn't sound like a very smart, not smart, it doesn't sound like a very fiscally spendy economy. Have you seen tax receipts falling off a cliff? That's a sign people are spending less. I'm just telling you guys, you don't know. At the highs, everything seems bullish, and at the lows, everything seems bearish. That's just always how it is. It's always how it is. I mean, the market's down a little bit today. Cool. I mean, I see that. But it's where it's like, who gives a shit what it's down? If you're layering into shorts up here, this is where you should be doing it. But Scott, you're like, I'm too scared to short. I ain't touching this market. Just got my popcorn and watching. Yeah. I mean, again, how would you not want to short this up here? Even the bears are scared. It's hilarious. It is absolutely hilarious. All right, we'll see what happens. Now, again, it is earnings. Could rally some. It could be choppy, but risk reward says pick your favorite index and short it and put a stop on it. Don't even think twice. VIX at extreme lows, don't even think twice about it popping at some point, right? The names that have been leading up, QQQ Tech, so stretched that at any point they literally could implode. Netflix, Tesla. Maybe they rally back a little bit to close the day. Who knows? But look at these gaps. Are these not professional gaps? At extremes? Right? Oh, I'm scared. Scared money don't make money. Define your risk. It's that fucking simple. Excuse my language, but it really is. Oh, I don't want to lose? Well, you can't win either when you don't trade or you don't invest. Everybody and their mom is confident the market's going on. Go look at StockTwits, the dumbest people in the world. Remember, fatten up lamb for slaughter. Right? No, you can't short this. Okay. You can't short this? Like, again, those will be the same people, I swear to God, at some point, probably in the fall, when the market's tanking and it's due for a mega rally into maybe the end of the year or something, and you're like, oh, I can't buy this dip. And it's like, okay, well, it's going to rally. Bear market rallies average 17.5 or 6%, right? Oh, I can't buy it. All right. Buena suerte. Whatever you got to say, homie. Anyway. All right, I'm going to wrap it up if there's nothing else to say. I mean, like even Roblox got up to that range high. Doinker. Everything's starting to look similar. Again, if I'm you, watch Apple and XLF. That's all I'd watch. How much more can the XLF run? People remember, and this is the thing. Remember we said XLF was going to bounce. Why? Look at the monthly. We said it was going to bounce. Do you think this monthly closes over the 20-month? I don't think it does. I bet it does not. Yeah, of course the KRE. We talked about it. We talked about the liquidity on the KRE would bounce. Everybody and their mom who follows this channel said, yeah, watch the mid to low 30s. Sorry I don't have the box drawn, but you can see it. I mean, shit. We expected it. Look at the liquidity. Look at the daily. We talked about it. Holy shit. Novice gap. Retest. I mean, even Michael Berry was buying it, and it made sense. I mean, it's not like, again, when the Fed started throwing money at it, it was kind of expected that they might bounce. Now that they've rallied 30, I mean, damn, 10, 12 points. 35, I mean, it's a 30% gain in 3 months. I mean, just we'll see what happens up here. I mean, I appreciate Intel has finally bottomed. No, Intel is not a buy. All right, bonus asking about real estate. You're trying to buy a house. What's your time frame? No, I would not buy Intel with anyone's money. Thing is fucking piece of shit. It's a terrible buy. It's an absolute terrible buy. Dead cat bounce on the monthly. Think could go back into the teenager land. No, AT&T, no. Why would you buy stocks when the market looks like it's going to roll over? Holy shit. Why would you buy stocks? I don't give a shit if AT&T has an 8% yield. I remember years ago when it was at 5% and getting slaughtered. People were like, oh, you got to buy it here. It's got a 5% yield. Now it's got a 6%. Again, cell phones. I mean, it's such a competitive market. Is this the future, buying cell phones? Now again, liquidity oversold bounce makes sense. But do you want to make a few pennies, a few dollars when there's like dollars to be had on other shorts? No. So bonus, feed me some more information because I can tell you about real estate because this is what I'm doing. I'm getting prepared to I'm waiting for interest rates. Once interest rates start going lower, the market will be peeling back. People's wealth effect will be peeling back. There's going to be people who have to sell. The fall and the winter are the best time because, again, people will not be buying because of the school year. So now all of a sudden you have dynamics in play where you're going to have more reasons for buyers to come out and just absolutely lowball the shit out of people. Now, if you have a good agent who's been around, keep in mind that most agents are going to be dropping out because we had more agents than we did people in AI in real estate. At any point, you could, everyone had their license. Anybody could sell and buy a house. Have a good agent. Let me help you out. Get in touch with someone. And don't use your brother, your uncle, your neighbor. No, fuck no. Use the best. When you go to attorney, you need an attorney. Do you want to go to Better Call Saul? You need a doctor. Do you want to call the guy, do you want to do the med student working on you? No, work with a pro. They'll have off-market deals. This is why I try to explain this to people. Like all real estate agents are not the same. Everyone tries to pretend they are. Okay, well then you haven't worked with a good one. When we list your house, we always blow it out and get over market value. When we buy houses, we tell people, if you're willing to be patient, we will find you a deal. Well, what do you think the average real estate agent wants you to do? Buy the first house you see and move on. I don't care. Pros who've been doing this long enough, who have the money, they will not push you into deals that aren't good. They have patience. They're not sitting here like, oh, I got to eat, so you better buy a house. No, they set you up on searches looking for investment properties. They're going to take you in. They're going to have off-market deals. They're going to have people in their network that call them first and go, hey, Dan, we're looking to sell our house. Do you possibly know someone who'd want to buy it off-market? Well, let me talk to somebody I know. That's all it is. Yeah, in the next year or two, again, I would be building up your capital for your down payment. That's all I would do, and get your credit going well. But this is the problem, is that in the next year or two, it's not going to be the right time. Yeah, you don't need a criminal lawyer. You need a criminal lawyer. I agree. That's funny. No, the next time you're going to have to figure out how to middle the interest rates. Because again, yes, well, can affordability still get better and interest rates go? But look at 2008, 2009, right? This is where, again, if you timed it right, you basically had a 3-month window, 2-month, man, it was almost a couple-week window where rates went screaming lower. Now, prices still went lower. We know that, right? And you got the reverberation in 2010 with somewhat better interest rates. But if you're buying at certain price points, now again, if you're buying second homes, you're buying high-end houses, don't do that. Wait for the market to really crash, because those things will pull back 20, 30, 40, maybe 50, 60%. I've seen that in certain markets. But if you're looking at certain real estate at certain price points that always have buyers, they're not going to drop a ton. So that's where now it becomes more about what the interest rate is, because if you can get that same house for $350,000 at $300,000, but your interest rate was right now 7%, 6%, you can get it at 4%, 3.5%. You take it and you run, because your interest rate's gonna be the difference maker between your long-term profitability. Because what you buy it at, who gives a shit, right? That interest rate's gonna allow you to hopefully rent it out and also keep your payment as low as possible. Because think about it, a 3-4% interest rate is way better than 6%. And if the purchase price is $300,000, the difference at $325,000, it's minimal. The interest rate is what matters. That $25,000 of debt doesn't matter. It's minimal. It's the interest rate that's going to matter. That's why I always tell people, like, I don't want to pay X price for a house if the interest rates are. I'm like, talk about the amount of money you will save in interest alone by getting that 1, 2, 3 points, maybe lower interest rates, will blow away any savings you may have saved on the house price itself. You might save hundreds of thousands of dollars of long-term interest. Oh, but I wanted to wait for another $15,000 drop in the house. You are trying to pick up a nickel when you could be saving dollars. Does that make sense? Talking to everybody, not just bonus in general. Oh, again, think about it. A loan for $300,000 at 6% versus a loan at 3.5%. Yeah, don't hire your friends. No, hit me up. Let me find you an agent, man. This is what I tell you. If you hit me up and I get involved, I get a referral. It's like going to Zillow, Realtor.com, whatever. If you enter your information on a website, they find the agent, they take 30%. Well, I take 20%, and then you get 2 agents, and I help people with their transactions. I help vet the agent they're going to work with. I know how to talk to them. I can ask them the questions. What are they going to do? What do they do to find deals for buyers? Have they been in the game a while? Okay. How many deals have you done? Do you invest in real estate yourself? Because when you find a real estate agent that does not invest in real estate, you don't work with them, period. End of story. That'd be like trying to go to a financial advisor who doesn't know how the markets. They're just real estate advisors. And again, because I always tell people, like, if you're buying good real estate, you're not buying it and holding it for a year or two. The goal is to literally turn that motherfucker into a 401k or some sort of money-making, long-term passive income product that you can borrow against at any point as well. And inflation does what? Always goes up over time. And think about this. I tell people, if people aren't buying houses, what do you think they're doing? They're renting. So in recessions, the rents go up. In bull markets, house prices go up. You're basically getting some sort of appreciation in some part of your asset every time. And then if you don't know the tax advantages of investing in real estate, depreciation, all expenses written off. Now again, if it's your primary residence, it's a little different, but when you do turn it into an investment property, it's going to be great. It's amazing. Anyway, I could go on for hours about why. I think, now again, it's the slow, safe money, right? That's the thing with people with real estate. Like, do you realize the wealthy buy real estate after they make good money, right? They're not, some people can get rich buying real estate, of course, like commercial real estate. So yeah. But 9 times out of 10, the average person is using it as a tool. That's a diversification into another asset class that will appreciate with less volatility, right? People say, well, I just dollar cost average the market always. Okay. or I dollar cost average into my favorite stocks. That's probably that's the one that actually gives me the most nervous, because like your favorite stock might not be around in 5, 10, 15 years. They might not evolve and they might die. I mean, you can always buy the market on dips long term, but man, you want to go higher? Okay. I love dollar cost averaging in bear markets, but not in bull markets. Always. Just wait for pullbacks. There's always 10, 15% pullbacks. All right. About an hour. Any other thoughts, questions, concerns? If not, I'm going to wrap this son of a bitch up. I don't know why I feel like cursing today. I've just been like in an aggressive mood. Give it another 30 seconds. Questions? Again, ask anything. I mean, I don't mind people talk shit. I really don't care. Oh, but you've been wrong. I don't know. All right. Have you ever traded and won every time? I always laugh at that. People like talking junk. Like, did you call bear markets previously? Have you called bull market bottoms? No. It's really easy to be like, oh, you're wrong. Yeah. Duh. Let me guess. You're wrong too sometimes. Like, it's like one of those things where it's like, it's like, do we want to have an ego battle of who's more right and who's wrong? Okay, well, you do you, bro. You worry about your own money. Good luck starting your YouTube channel and giving out advice. I'll gladly follow it for 3 seconds if I like comedy. This is hard. This is incredibly hard at times. Some people don't survive because, again, they don't have risk. Man, I've said this 1,000 times. You can be a terrible trader with good risk management. You'll outlive a great trader with terrible risk management every time. All right, I'm going to wrap it up. Love you guys. Hit me up if you have any questions, as always. Peace.